Hello traders, it is 8:01 a.m. Chicago time on Thursday, the 21st of January 2021. This is episode number 1921. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. And no, you're not going to hear from the cat because I've been coming into the office to do the trader bite these days. So no cats here. I don't think anybody in the office will appreciate a cat meowing really loud. Anyway, let's dive right into it and jump over to the Convergent pre-market summary sheet. Slight risk on sentiment overall, and allocation is still higher. The market has just dropped in the last half hour or so to cancel a little bit of this. Currently, the lead is from the currencies. The British pound and the euro are moving higher. You can see 0.54%, 0.45%. The dollar's off. Copper's higher, silver's higher, gold is pretty much unchanged with a slight allocation to the indices. The Dow has just gone negative, down 5 points or 0.02%, trading at 31,091, and that's where we stand. So we've gone from a mildly risk on to meh this morning. As we push right back in the S&Ps, we push right back to almost to where we closed, and we're only 1.5 points higher than yesterday's close, and we are right on top of yesterday's point of control. So overall, we're moving from mild to about neutral risk sentiment. Other than that, what's driving things? President Biden to tackle coronavirus pandemic on first full day in White House. President Biden will launch an array of initiatives to rein in the raging coronavirus pandemic, including mandating the wearing of masks and things like that on anything that the federal government controls. Among other measures, some decent and positive words out of ECB's President Lagarde relating to the risk with this election being done, that this is market positive, and so on and so forth. We have consumer confidence flash today at 10. We have Japan's inflation rate at 6:30 p.m. Eastern, and the UK gets the GfK consumer confidence at 7:01 p.m. Eastern time. The consumer confidence flash is out of the Eurozone half hour after we open. Pay attention to earnings. There's a lot going on on the earnings side, Intel, IBM, and so on. As far as the overnight session, what we've done so far, 174,000 contracts, so relatively okay volume on about 19 points of range, which is relatively tight compared to recent action. The overall profile in the overnight session has been balanced, and that's where we stand. So let's hop right into our review segment from yesterday. So yesterday, the primary scenario is a pullback to about 38.04. That's where I was looking for, pullback to 38.04, and then I was looking for it to launch off, and the target is the first measured move up at 38.32. The second target is 38.45. With 2 Vol Sigma up there, I did not expect price to move that high coming off of the inauguration, but overall, that was pretty much on point. If we look at what we did yesterday, there was just very little pullback. Remember, the pullback was due to the idea that inventory Overnight inventory was quite long. Sorry, I keep having to clear my throat. Overnight inventory was quite long, and the expectations for the market to pull back, and the support was expected at 38.04. And what it did is it pulled back to 38.11, which also became the first hour's low, the IB low, consolidate early on in an upward skew right here in a channel, and then we finally get that impulse. And then from there, our job is to look for pullbacks. This impulse actually was quite interesting in that not only was it a decent impulse, 18.5 points without a single 12-tick pullback. This is the pullback metric for these rotations. This is what governs these rotations. Any move that does not have a 12-tick or higher pullback is considered a continuation of that move. So we have 18.5 point move, and then what do? We put in a local double top at 33.50. So we push to 33.50, pull back to 29.75, push to 33.50 again, and we pull back, and this creates a really decent place, a decent stock for long, right? We're trading off of the impulse, so we're looking for a continuation move. The hard part is finding the spot to lean against. So we have a very minor zipper here, but overall, I would have to sit back and wait for it to pull back either to the mid of this rotation or pull back to the mid VWAP cross here on the chart. But of course, being that it is, as expected, a trend day up, it turned a little bit sooner, and there's the continuation move right above the initial balance. So we have range extension up. The market's still pretty aggressively up. It pushes up and it creates another zipper up here, which then acts as resistance. Here we are at 33.50 again, higher lows. Looking for that to break, and then it finally kind of breaks away. We form this nice volume here. We have basically chopped. Remember, the 32 was the initial target, right? That's the measured move target, and we expected some sort of a response there. And what we ended up doing is building a high volume node on top of the 32, and then we finally released to the upside. We scroll this down. We finally released to the upside, and the next stop, as I mentioned, the measured move at 45 goes to 47, pulls back, builds what? Builds another high volume node on top of that 45 area before it pushes to 52, and then of course selling on the close as the book balances for margin, end of day margin there. That's expected. So we end up with a somewhat of a triple distribution profile, and one that has the point of control in the upper quartile outside of the initial bound. So we expect the market to push higher overnight. We expect to push this high, and we did. We pushed the overnight high to 59, what is it, 59.75-ish, something like that, 59 something. So that's where we pushed the overnight high. That's expected because, again, trend day, we have a gap and go situation. This is what's called initiative buying. We left a gap zone below us. So if I turn on my master levels here, oops, you'll see that there's a gap being outlined in gray that's open. So this is an unauctioned area, and that becomes a key target. Once the market starts to rotate down, that gap zone becomes a key target. We also left some single prints at 38.20.75 and 38.35.75. These are single print areas, so they are marked as the upper one's marked as a stock zone. I did not mark this one as a stock zone because it's not as relevant. It's B to C period singles. If you're a market profiler, you'll understand what that is. If you're not, it's not important. So that's where we stand. We've come back to 38.47 now. The close is 38.44.50. We just tested it, and that's what we have for yesterday. Yesterday, price and delta moved directionally. in the same direction. Yesterday was definitely not a day to get short, and if you did, of course, it's all about time frames. If you did get short, you've got to keep those very, very, very light, very quick, and very tight. Again, we do not fade a gap and go situation or initiative buying. Okay, so that carries us over into the overnight session. So this is a 30-minute full session. The orange represents full session. The blue profiles represent RTH or the pit session. The gray, the dark gray is the pit session, and everything else is what's called extended trading hours. So we close near highs. We move the point of control near high. This is yesterday's profile. And then we reopen right here and we push right up, right? So we continue to 38.59.75. So we put in an all-time high in the S&P futures, 38.59.75 in the extended trading hours. And then from there, we basically start to skew down. We have a pretty balanced profile. Market appears to be tired up here, and then it lets go. It falls off on just around the release of the initial claims numbers. It falls off a little bit, and then because initial claims came in really high, so we'll see how the market responds on the open. So we're back in balance, and we're back to where we were yesterday, or where we finished yesterday. So we're opening completely in balance after a rally day. Overall, yesterday actually breached the 1 volatility sigma closing numbers. It pushed all the way to 2 vol sigma. Technically an impulsive day after a gap up. We expect the market to make an attempt at a run higher. It may balance off today for an attempt on higher, unless it's driven by anything else. I'm not seeing, from earnings to geopolitical to political news, not seeing anything that would drive the market lower at the moment. So I'm quite cautious on the short side. Again, 179,000 contracts traded. The inventory overnight's about 100%. It's a little under 100% at this point long. So we do expect some sort of responsive selling on the open. Here's the daily. So this is the daily chart. You could see that I talked about this on Tuesday, that we pushed down on Friday, but then we breached that high on Tuesday. We opened above, we tested into that range, into Friday's range on Tuesday, but ended up with a doji against the 37.95, and this is quite significant. You might want to go back to Tuesday's or Wednesday's Trader Bite to outline the fact that, hey, if this thing does not look, actually it might have been Tuesday that I talked about this thing does not look like it's selling any further, and it's likely to test 16. I talked about 16, 23 quarter, 24 half, and it's likely to rally into 32 and 45. And that's what we got yesterday. We actually extended beyond 45 and went to 52.50. But overall, and you can see the gap in volume right here on the weekly. So what we have beneath us, look at the weekly point of control, is the same as last week, and it's the same as the week before. What we have below us is a lot of support here in terms of volume. I mean, that's very clear acceptance. If this thing starts to roll over, the target becomes 37.95. Again, look at how accepted that price is. I mean, we're building a prominent point of control here, high volume node, and the market like these prices. So as we roll over, just remember, your 37.95 becomes the big bus stop on the way down. It is, again, yesterday, as we pushed higher on a relative basis, the delta down here is still kind of tired. Like it's more offers pulling with a little bit of lifting by aggressor buyers. It's more people seeking higher price by stepping back, by moving back. It's more so than buyers coming in and just punching through and taking out sellers, which would so we call this moving. This is a market that's kind of moving up on thin air somewhat. Volume was okay yesterday. It's right into the point of control of what we would expect for volume, and the range was okay. It's right in the point of control of what we would expect for range as well. So the trend is healthy, but it's not getting a lot of aggression. And why should it? It's at all-time highs, right? It's at all-time highs. So that's where we stand. That's the big picture. So let's change gears now and take a look at what's expected for today. I want to make sure everybody remembers, and I posted it in the chat here at the very top, ft71.com/FIO-AMA-0121. Today's the 21st. At 4:30 today, I'll be on Futures IO to talk about, are you doing what it takes to trade right? The Trade Right program was launched this week. We did a public webinar on it last Thursday, and about 250 members are on it. And you can see in the chat here, some members are providing feedback here, which we appreciate. But I'll be on today, and it's an AMA, so you can ask whatever you want, not necessarily relating to the Trade Right program, but do register. Again, ft71.com/FIO-AMA-0121. It's at 4:30 today. I'll be on to answer whatever questions traders have. Let's take a look at what's expected for today. Okay, so here we go. Okay, so here we are. Push up, pull back, lower high, and a dip back into the prior point of control and the prior close. This is where we are now. So as we move forward, and it's bouncing back up, a fair amount of resistance, actually. I'll show you that on Bookmap here. My Bookmap, if you notice, is black. It's because I'm filtering for 199. It doesn't show me any size below 199. I want it cleaner that way. As we push back up, note that in this cluster here, the prior high, prior value, the overnight point of control, we have this big zipper here, and we're pushing back into it. I'm looking for this to be challenged. I'm looking for this to be a fight up here. So if you're looking long, in my opinion, you'd want to wait and see how it responds in this area. This is a high volume area over here. So just pay attention. But overall, the expectation this morning is it's likely to butt its head against that, pull back, breach the 38.40.75, find a better base probably against the singles at 38.35.75 or so, and then I'm looking for it to balance out and then come back into the point of control of yesterday and hold steady into the session. This is what I'm looking for today. When we have gapped and run to new all-time highs, we've tended to either pull back or just sit sideways and bounce out. I'm not imposing my thoughts on the market here. I'm just setting up plans for whatever eventuality the market exposes, so I know which areas to trade against. Again, what I'm looking for is the key area below for support, and if I'm short for a scale out is 38.35.75 or so. Once it clears that, then we're looking for that 38.23.24 area, the prior high below. Secondary is it pushes, squeezes through squeezes through, and then starts to continue the impulse from yesterday. I have nothing up here. You can see there are no stock zones in this area. There's nothing up here clear to 38.80. So it's any man's guess, any person's guess where this thing ends up. Okay, we're not opening in a gap from yesterday. I'm expecting a relatively muted session today versus yesterday. Okay, so those are the two key ideas. Hopefully, with the context and the story that I've laid out, all the pieces that I've laid out, you're able to get better alignment or get into the zone of what the market is doing. Again, I'd love it if you could register for this webinar at 4:30 today. ft71.com/FIOAMA0121, all lowercase. And then Convergent members, don't forget that Dr. Andrew Menaker will come in today and talk about the psychology behind traders not sticking to their plans. Just looking at what obstacles get in the way of consistency is a big problem for traders. That's at noon Central, 1 Eastern for Convergent members. Good luck, and I'll talk to you tomorrow morning. Take care.